All right. Welcome to the Big Skinny with me, Lou Basenese, on a very special Monday. I mean, it's special to me because I was born today, and I'm not one that loves to celebrate my birthday, but those around me do. So we're doing it today on a big tech show, and we're going to bring in my partner in crime, the Dodd man, whose whole idea was to celebrate this birthday thing. If it goes wrong, bro, it's on you.
Happy birthday, brother.
Thank you, my friend.
Any opportunity to put you in a funny little hat, take one for the team. Let's do it. So got you a little gift in studio there. Lovely Miss Lydia should be serving you a nice old fashioned.
An old fashioned? Am I supposed to read into that? Look at this. Thank you, my friend. An old fashioned. Here we go to celebrate. Cheers to being older, because officially, I think you're older than me.
Just by a couple days.
Yeah, I know. Well, listen, I appreciate you. I'm learning in life as I get a wee bit older than 29 to let other people celebrate the big milestones. Good friends are hard to find, and you, my friend, are a good one, a keeper for sure. So I won't get too sentimental, but we got.
I think I should be giving you the birthday wishes and all the kind words today, but we'll save that for later.
Oh, Violator 2020. You know what?
Oh, yeah,
it's made my day today because you are always here, Violet. I love it. I appreciate you. And with that, let's get to this week's show because, folks, we are live streaming on multiple platforms on X, LinkedIn, YouTube, and this is an interactive choose-your-own-adventure show, as Violator 2020 proved. Anytime, feel free to opine. Put those comments in the chat box there. We'll bring it up on screen. There's no messages, questions, requests that are out of bounds as long as you don't mind us giving you a hard time in return. If you can dish it out, we can take it, but you better be able to take it back. So if you're joining us for the first time, you're probably wondering, what the heck is this Big Skinny all about? Well, we're about two things: all filling, zero fluff. What's that mean? Well, some have described it as the sports center of financial news, and I'll take that because what we love to do is show you the highlights, not the lowlights. We love to show you the things that matter in the markets, not the distractions that keep you from making money. Because, folks, if I've learned one thing, we can be good friends, but if we're not making money together on an investment show, forget it. We're not going to be friends for too long. So we're always looking to increase our bottom line, yours as well. We also adopt a simple philosophy: be humble or be humbled by the market. So we always bring on additional guests that can lend their expertise. And I'm happy to tell you, on this big birthday bash, we've got two of the most insightful minds when it comes to big tech: Daniel Newman and Shay Boloor of the Futurum group of companies, sharing their perspectives on what matters in this market when everyone is freaking out about another bubble, an AI bubble. There's too much spending. The Mag 7 stocks can't keep running. But what? What if they can? What if this is just the beginning? What if 48 is the new 28? I'm here to tell you, folks, we're going to get into all that and more. But before we do, I always start the show with some of my own perspective. Distill down the headlines and the noise to the things that matter most. We call it the rundown, where I give you one headline that very often you should probably ignore because the consensus typically gets it wrong. One key chart among a few other ones that are supportive. But the key chart tells you the data that you need to rely on to make the smart money moves. And then we end it with one thing like that: a smart money move, one action to take so that you can put the information we share to work right away. So with that, let's get to this week's rundown. All right, welcome back for this week's rundown. And folks, it's all about big tech, big earnings, big rallies, big price increases, big spending. Where do we start? Well, I don't know. That's actually the question on the top of the financial media's mind. Axios out is, what's next for big tech, right? What are we going to do? We just went through all of the Mag 7 reports except for NVIDIA. We'll touch on that later in the show. And everyone wants to know what can come next after this huge run-up in performance. And look, I'll tell you, the question is it too many trillions, right? Do we have too many trillion-dollar market cap companies out there? I was early predicting Apple would be the first $1 trillion, $2 trillion, $3 trillion market cap company. I thought it would be the first $5 trillion. Nah, NVIDIA won that race. But if you look across the board here, even Tesla has breached the $1 trillion market cap. And folks, I'm going to tell you straight up, I think the financial media gets fascinated with arbitrary numbers instead of focusing on fundamentals. Because if we look at it, the $1 trillion market caps are justified by a lot of price increases, but also fundamental. So let's just look at the price increases quickly, and where everyone's starting to bemoan the fact that the Mag 7 has left the rest of the market in the rear view, right? Here's a comparison of the Bloomberg's Magnificent 7 index versus their Bloomberg 500, which is essentially the S&P 500. And if you look closely, it's not that the S&P 500 outside the Mag 7 hasn't returned any money. It's gone from a base of about 100 to, I don't know, 150. So a 50% return in 5-6 years, not bad, not terrible, but it's not what the Mag 7's done. But is this really all just about price, run up, and hype? No, in fact, it's not. It's about earnings, folks, and we always say this on the show. Earnings ultimately determine stock prices, and as long as they're going up, stock prices will be going higher. And here's what's consistent. Mag 7 companies here, looking at the far left blue bars, shows that double-digit earnings growth rates have been the norm. If we go back and looking forward, Mag 7 are going to outperform the rest of the market. But note here, the rest of the market, the other unmagnificent 493, are doing just fine. They're growing earnings at about 6.7%, actually checking in a little bit higher. And moving forward, the estimates call for them to play a game of catch-up. The overall market is doing just fine as well. So, folks, this is not a matter of just hype, where it's a dot-com bubble where investors are just bidding up prices with no fundamentals. So if the earnings are going up, is it justified? Absolutely. Can it continue? I think so. We're going to get into it later in the show. And here's the key thing from Phil Rosen, that points out this earnings type of growth, this runaway blockbuster double-digit growth, doesn't happen when they're in a bubble. It's just not bubble-esque. It's not bubble typical, right? So, folks, the fact that there's so many headlines worrying about a bubble means we're not in a bubble. No one realizes when the bubble is going to pop. And as I've said in weeks before, you don't win any prizes for accurately predicting when the bubble pops. You win prizes and you increase your net worth by staying invested as long as the ride lasts. And then you have smart risk management techniques where you get out. So the question is, if earnings are growing, if prices are increasing, where's the fear? Well, it's spending. If you look at this chart, you see that there's just runaway capital spending based upon the launch of ChatGPT and NVIDIA's latest chips. We're looking at literally hundreds of billions of dollars going to be invested in data centers. Now to the money chart. Let's give it some perspective, because everyone wants to so quickly run and compare this to the dot-com days. Here's the key difference. You're comparing apples to oranges. What are you talking about, Willis? This is what I'm talking about. Look at the capex to sales ratios or the debt to EBITDA ratios. For you non-financial types, that basically says, look at the spending versus the sales, or look at the debt, how much money they're borrowing to grow versus the profits. And back in the dot-com days, these telecoms were just spending like drunken sailors, money they didn't have. It led to over-leveraged balance sheets and a disaster in the making. And it happened. Fast forward to today, and look, the big tech companies are not overspending. They're not over-borrowing. They're actually pretty under-levered. And if we look at their cash flows, you see that they're spending money that they have that's coming in recurringly to fund this investment. And I've told you this before. Look at your personal banking account. Show me what you spend your money on, and I'll show you what you care about. Well, translate that to corporate America. Show me what they're spending money on, and I'll tell you where the future growth is. So there's one spot that all these mega hyperscaler, Mag 7, big tech, whatever moniker you want to slap on them, are spending their money on. And it's data centers, it's growth, it's chips, it's AI. So believe the hype. It's real. It's got legs. It can endure. But what if you're a little nervous Nelly out there that you're worried about maybe we'll get some pullbacks? And I'll admit, even the Mag 7 stocks have had big sell-offs to then bounce back. I mean, Alphabet is a just classic example here, most recent one, down to about $140 a share back in the April sell-off, and now booming to all-time highs. So you have to understand the volatility. But if you want to protect yourself, if you want to be a hedge, if you don't yet trust us here at the Big Skinny that we know what we're talking about or what our guests might share, then you buy, this is the action to take, you buy the Invesco S&P 500 equal weight ETF. This is one that doesn't give preference for market cap, which means it doesn't give extra weighting to the Microsofts and the Amazons and the Alphabets of the world. It gives every company in the S&P 500 equal weight, so no matter who does best, you're profiting from it, and it doesn't have undue influence. Now, in all fairness, it's underperformed the market cap weighted S&P 500. But if you're nervous about big tech taking a big header and just really flaming out, then you own this ETF, because the rest of the companies in the S&P 500 should make up for that underperformance if it happens. And as I showed earlier, earnings growth for the unmagnificent 493 is expected to increase by double digits as we head into the back half of the year and the beginning of next year. So again, don't believe the hype. There's plenty of more big tech growth to come, more profits, which we're going to drive those share prices. And we're going to get into that and more with my next two guests and friends, fast friends, who share a lot of commonalities. And one thing we don't share in common is the fact that they have a much more inside track on big tech based upon their business. And we'll get into that and more. But before we do, make sure you're following us on all the socials. Mr. Beast, who would celebrate my birthday if I knew him, and would say, follow me on YouTube. You should go do that right now. Scan the QR code on your screen. We're trying to get to 1,500 subscribers on YouTube before the end of my birthday, where I turn into a pumpkin like Cinderella. It just happens. We've got about 5 hours, 6 hours to go. I'm bad at math.
Take your shirt off.
No, not taking my shirt off. That's a no from Taylor in the studio. But folks, what is a yes? Join the conversation all along the way. Share some comments, questions, feedback. Let us know what you're thinking. What's got you worried in this market environment? What's got you excited? I know we've had Chad Towers, a frequent guest in Violator 2020, sharing investment ideas. We're not afraid to opine on them. And we'll do just that and more when we come back after this short break.
Basenese joins me this morning. They've got these tariff arguments going on again today in the Supreme Court. Let's just speculate for a second.
Sure.
Supposing the tariffs are thrown out, does the market go up or down?
Immediately down, but then very shortly after goes back up, because the president and Secretary Bessent have said they have other ways to get these tariffs through. And I've always said this: you have two parties that are agreeing to tariffs. They're going to find another way to do it if the first route doesn't get there. This is a business deal. If you got to re-engineer it a different way, it'll happen. But I do think Justice Roberts' comments yesterday were instructive. I think it's going to get passed. They're going to get a yes, but there's going to be some restrictions, because he basically pointed out that it seems like there's a major authority if you can impose a tariff on any country, on any product, on any sector, that seems a little bit far-reaching. So I think it's a yes, but with conditions.
I just don't know when we're going to get the decision, by the way. I have no idea on that one, but we hear the arguments. All right, Luke, stay with me, please, for the hour. Eli Lilly, they're going to start late-stage trials for their obesity drug. It's called Amylin. What do we know about this?
So they're starting late-stage trials next month. What they want to do is maintain their lead in the booming obesity market. It's an amylin treatment. While they have their competitors, Novo Nordisk, Pfizer, they're now bidding for Metsera. Lilly says, let's go in on this type of injection. It helped patients thus far in our early trials lose 20% of their body weight at 48 weeks. So this is their avenue.
Yeah, I love this. I own Eli Lilly, but here's what's unique about this. GLP-1s target the gut. These amylin receptors are in the brain, so it's actually being proactive to control hunger versus being reactive after you've already eaten. The cool thing here is because they target two different things, you could conceivably combine these with the GLP-1s and have a double whammy additional effect. So rapid weight loss.
And you lose a lot of weight.
A lot of weight loss really fast, but no, this could also be more safe and effective.
And the GLP-1s might be getting a lot cheaper. There's a White House announcement.
Yeah.
At 11
Keep in mind,
o'clock.
GLP-1s are now the largest drug class in the country,
Crazy.
in the world. So Merck's Keytruda was generating over 30 billion. GLP-1s are on track for over 36 billion now.
And when they get the price down in the 11 o'clock announcement,
149.
everybody's going to have them.
Yeah. All right, welcome back to The Big Skinny with me, Lou Basenese, and I gotta confess, this is my favorite part of the show because I get to bring in really smart people, really experienced people that have a phenomenal track record and then get to learn from them. We just ask the questions and sit back and learn along the way. So without further ado, I'd love to welcome Daniel Newman and Shay Boloor, both of Futurum, setting records and breaking lots of things on their way to big success in the big tech market. But welcome, fellas.
Thanks for having me. Us,
yeah. What do you got on your hat there? 10,000 and waves tattoo. Did we have a new tattoo? Do we have to all share tattoos? Who's got tattoos?
No, it's fun. It's my sister's shop. I don't have any tattoos. She's covered in them, so we're polar opposites in that way. But I love rocking her shop on my hat whenever I'm on any kind of stream.
I love it, man. Supporting your siblings, nothing better than that. All right.
Well, maybe he'd wear a big skinny hat if you gave him one.
I know. We got to work on merch. Dan, the man that's here in the studio, has got a big skinny gear on. But maybe if I got a Futurum Equities hat still, because otherwise I'm just stuck with this.
I do get a lot of call outs for the merch. Like we have a lot of great Futurum merch, and I get a lot of requests for that. So maybe we'll hook you up one of these days.
Yeah, we need to get a swag store. So let's get right to it, because what everyone else wants in addition to the swag is good stock ideas. And I got to be honest, you guys have been crushing it lately. And I love Shai shares it all publicly, his individual portfolio. So what was the biggest surprise in big tech earnings, the biggest surprise mover for you guys?
Ooh. I'll jump in first while he thinks about it. I mean, look, I thought there was just some great prints that went the wrong way. I mean, my big, I think I went on and you and I were in the studio together at Varney a couple different times. I came on that day. I'm like, Microsoft's going to crush it. And then they crushed it. And then they went down like 5 or 6% in the week. Like, I mean, this was one of those absolute cases, though, where the movement of the market had nothing to do with the actual stocks and the performances. It was all about people's fatigue, in my opinion. It was all about people's fatigue with the government being closed. And there was like it was starting to send a punitive message to Washington that if you keep it closed, we're going to start to do things that don't only affect, the federal workers, we're going to start to affect the market. And then all of a sudden it started to pick up the speed of getting things done. But I mean, Microsoft had an absolutely amazing print. This is not a company that people think is highly overvalued. It's not a company, it's the company that has the most NVIDIA infrastructure stood up. It has one of the most readily available AI impacts to its business. It's diversified. It's highly enterprise driven. It's got these big contracts with Copilot that it's winning. And overall, though, it had the biggest growth rate. And so, I've been you and we've been the Google guys. Everyone's like, Google, Google it was underpriced. It was underpriced. Well, Google actually said it's finally fair, but it actually went up on its earnings. Microsoft just got crushed, which totally surprised me because that was the best print.
It was a shocker, right? But Shai, do you think this is a case of good is not good enough anymore for tech investors? Have we been spoiled too much, or is there pockets of growth that we're just not seeing?
I think a lot of big tech's a bit anchored on any kind of upward surprise because of the amount of capex that they should be investing at this stage of where we're at in the AI cycle. But for Google, for example, like I think that was kind of the most. It's funny because all three of us were very bullish on Google before it was popular among the masses. So it feels like saying that we were it was the minority to be bullish on Google feels odd in this group because we're all just big time bulls. But it was the case. But like Google's cloud is just every 3 months we're reminded how they aren't the little kid anymore among the big cloud service providers. Like Google Cloud hit, I think, 150 bill. I think it was up around 40% sequentially, which is insane at that scale. And I think that got another data validation that search isn't going to be getting destroyed by AI. And in fact, it's going to be quite the opposite. It's going to turn into something drastically different. And Google is like now showing that their TPU business should be taken a lot more serious than what people have been appreciating the past couple of years. Going off of the Microsoft point, like I think they ran up entering that print. I think that was their issue. I think that I want to say their AI capacity increased 80% this year, and their whole data center footprint will double in 2 years. I just think for me specifically, Microsoft's too messy to understand what the actual thesis is because they're so intertwined with OpenAI. Azure numbers are difficult.
Too messy because they've got other business units that take up like gaming, or because they're intertwined with OpenAI. Where's the messiness come from? And then second part to that is how do they unwind that messiness maybe for Dan?
I think because the Azure lines, I don't think there's any kind of clean visibility exactly what's happening at Azure because it's just so intertwined with what's happening in OpenAI. Like for Google Cloud, we get layers of information that Azure doesn't provide us, and same with AWS. So I think that to pass it to Dan after this, I think that their recent announcement or revision of their deal with OpenAI will help accelerate this. Maybe some increased visibility, but I don't know what's organic, what's raw, what's just insensual growth in Azure, and that's
Did you say insensual? You just came back from your honeymoon. It's incestual, not insensual.
Insensual.
These young guys, Dan, they were in love. They
they didn't take English super seriously in school, and now they all have AI to do the writing for them. So, but the funny thing is, I think all the clouds have some of what Shai's talking about. I don't think it's totally unique. I will say Microsoft has such a big business with 365 that it's often been confusing with their, with Office 365, how much of that revenue sits inside of the Azure number. But Google has Workspace. Google hosts a ton of its own workloads too. So that's not necessarily true. AWS was always, in my opinion, sort of the truest, purest form of growth when it came to IaaS. Yeah. And of course, they're now standing up a lot of their own software, ads and different businesses inside of their own infrastructure. So, and now they're all doing deals with OpenAI. We had an OpenAI deal with AWS this week. There's a Google deal with OpenAI. There's an Oracle deal with OpenAI. I mean, OpenAI is going to be the world's biggest hyperscaler if they execute in 5 years. So there's an interesting talking point for the investor class. But I actually think Satya Nadella did a master class in that renegotiation. He got the defined ownership in that company rather than this AGI rate limited profit sharing program that he had that had really no on paper value. He turned $12 billion into arguably 200. It's a 500. So into about 130, 140 billion now today because it's what
I think
$500 billion company.
I think Satya is in the camp of Tim Cook early days, right? Like everyone doubted him, and then Satya has just done nothing but execute. So I think he's crushed it. But
my biggest point is like that's it is going to weigh on their earnings because that company's a loss maker, and now they got to take 27% of those losses for a period of time. But if anyone's got the balance sheet to absorb it, they have the balance sheet to absorb it. But I think my thesis right now was like, what did we learn today from the bounce back Shai and Lou? Like what we learned today was that none of that falling from the last week. It doesn't matter if it was ARM falling on its print, AMD falling on its print, if it was Qualcomm falling on its print, or if it was a week before with the big tech, mega tech names, they were not falling because the actual earnings were bad. And I don't even buy into this capex stuff. You did a nice job in the setup. Like, look, I'm sorry, but Michael Burry does not know more than Satya, Sundar, Jensen, Lisa Su, the freaking president of the United States, and every smart person he has working for him. And the reason that Xi Jinping is ready to go to war with us over something in Taiwan and everything else, because they all know what apparently the bubble bears do not know is that if you lose an AI, you're going to lose the economic domination of the next 3-4 decades. There's no interest in losing that. They have to spend. Zuckerberg said it best. I have to spend big because I would rather overinvest than underinvest. It's existential to these companies.
No, that's absolutely well said. Shai, what do you think about this too? How do you respond to the bearish AI talk about, hey, this is it. It's too good to be true.
I mean, I welcome it because it adds additional dip opportunities, knowing that there's a high floor in any pullback, and purely because you've noticed the past 2 or 3 years, like there's been so much noise that's happened in the macro environments or even the geopolitical front. And even just past couple weeks, people are arguing about the stimulus checks. Is that a good idea? 50-year mortgages, tariff dividends, shutdown headline, all of that. So these are all bad ideas potentially, and cause a FUD. But it centers around what really matters and what's the driving force of this market rally. And it's AI. That's the only thing that matters in this cycle. And we are so early in this AI build outs, knowing that the common denominator behind every sharp pullback that refuses to extend lower, and people still get caught off guard. Oh, it's a V-shaped recovery every single time. How is that possible? It's because the common denominator has not changed. It's AI. And it doesn't matter if Michael Burry's shorted thinking the valuation is extended because using a traditional value metric lens to see what's happening. Maybe, we're in a very unique time potentially, but tell me another opportunity in any tech revolution we've had where there's a nationalist priority associated with it. There's a corporate arms race, and the backbone of future economic power is all happening at the same time, causing this crazy super cycle that we call AI. That is only going to continue. So I think that anytime we have a 5% pullback in the market in less than a week, like those dips have been getting bought because big money knows how real AI is.
No, look, I think you make a really important point is don't pay attention to all the macro. There can be a million distractions. What's the underlying trend? And I always talk about this, right? The smartphone boom was the biggest example. Invest in trends that endure through economic cycles. Like through the financial crisis, did anyone stop buying new smartphones? Absolutely not. Is it no matter what happens in the world right now, is anyone going to stop deploying AI? Absolutely not, because it is the future and it's existential, right?
Yeah, there's something to it too. It's actually pretty deflationary. So if the market, I've been saying this since Fed tightening, was that actually automation, workflow, enterprise AI, again, this isn't a new thing. It wasn't new in 22. Doing things that basically took overhead and operational costs out of your business and it allowed you to be more efficient with tech. This has been a multi-century thing now, and we're going to continue to do it. And AI is going to enable companies to drive more profitability, drive more growth, do it with less cost. I mean, the real problem is the consumer. It's going to be like, look, if we do this too well and we put enough consumers out of work, who's going to be continuing all the spending? Because I think that was some of the trickle down of the government shutdown, was we were starting to get worried about the health of the consumer. And if the consumer's health starts to struggle, that's when the economy starts to struggle. So there is all these different breadcrumbs. But I'll say one thing about the whole short thesis, bear thesis is, I think I said this, Lou, I said to you when I was on, we were on the Big Money Show together. I said, look, if you think it's a bubble, short it. I mean,
good luck to you, right?
Yeah, good luck. Short it. Good luck. Because the thing is like, we're going to find out at some point who's right and who's wrong. And I mean, you said this really well, and I got to give you credit, Lou. I don't give you credit often enough, but like in the setup, you kind of said, look, there is a possibility that we're in 1996, 97 right now. And that there is a 2000 moment coming up. And it will be, I think I heard one of the Microsoft technical executive staff say that like, there's no sign of a supply, demand meeting supply for at least 3 or 4 more years. So the point is there might be a point where we do find out we've overbuilt. And because AI is proliferating so fast, it's unlikely to have as long of a bubble period as say the internet did for finding utilization, but there might be a hard crash. We might see a 40% run up from here before we see a 30% crash.
Yeah,
35% pullback. Dude, your point about getting out at the right, but it's not now. The thing is we are not there yet.
Well, look, there's a great quote from Peter Lynch, right? More money has been lost by trying to predict the top than has been lost by staying in the market and invested over the time. So, right, if we go up another 200% from here or 100% from here and have a 30% market correction, you're still way ahead of versus being like pulling out of the market right here and saying like I'm going to sit on the sidelines for a better time. But
Lou, I rode SoFi just as a quick anecdotal story. I bought SoFi after IPOE and I was buying it all the way up to like $23 up to its top. And I literally, rode that thing all the way down to $4. And now after dollar cost averaging, I'm up
30 plus. Yeah.
Well, I'm up 30 plus on the stuff I held. I'm up 300% on my DCA. And I'm saying that was over just a couple of years. So I'm saying we're crushing the average S&P or hedge fund investor just by staying invested and staying committed to your conviction of names that and companies that you like. And I mean, these are real companies with real growth, real earnings. That's the same thing with Palantir, man. I know everyone likes to talk about Palantir, so I'll just throw that ticker out there. Look,
I don't even know what they do, though. I got to confess, I'm a seasoned analyst, and I have no clue what Palantir does except make money. That's it.
It's ontology. Just use the word ontology. You'll sound smart. But basically,
is that oncology related to cancer? No, it's like digital cancer. I don't know.
Ontology. Ecology. Yeah, that wasn't not funny, Lou. But anyway,
it's my birthday, man. Give me a break.
Oh, you look great. You look good. Okay,
so Palantir. Let's get to Palantir. Really, explain to the layman what do they do? What's the future?
It's so extended. It's so highly valued. It was running up it was up 300% at the very top, or like 260, some ridiculously high number would have hit $200. Or what does it say here? 231. And the point is it pulls back 10%, 20% on its earnings. And everyone's like, oh, it's only up 200%. And the point is look, this is a company that's growing at a rule of 90. What was it? Was it a rule of, was it over 100? Shai, you know this, right? It was like
114. 114.
Rule of 114. So what I'm saying is look, you can bet against it because it is extended right now, and you're typically correct. I said whether you're long or you're short Palantir, you have a reason to be either. But this is just a freight train. I do not stand in front of freight trains. I do not stand in front of a company that's growing this quickly and a CEO as smart as Alex Karp. So what I'm saying, this is a perfect example where, look, there's a reason you could short it. I'd find something else though, man, because this company's growing way too fast.
I agree. Look, shorting based upon valuation and being overstretched never works out consistently. And just because some guy who made a huge bet and was right once doesn't mean he's going to be right again. I want to open up the floor. We got some questions and comments coming in. I've just complicated it because we've got so many people. Do you really need to know anything else, Lou? Vanessa, Michelle? No, I don't, because Dan knows everything about Palantir. They make money. That's it. That's what Palantir does. They're making money for shareholders and themselves. Question here, though, came on Oklo, another name, right? A $16 billion market cap, up 400% year to date. No revenue, no reactor, and still pre-commercial. Sam Altman's backing and the nuclear AI hype. What's really fueling this valuation heading into earnings? Vision or pure speculation? Shai, this is I believe one of your holdings, right?
I mean, no, it is. I just think it's probably the best derivative on the fact that AI data centers will quadruple global power demand in the next decade. And I think, again, it fits that SMR space really well. It's the best moonshot. It has the best scalable model for the SMR space, which will help with the AI data centers deal with that power demand issue they're going to experience next decade. And right now, they don't really care about revenue on that front. And I think that it's just, again, you can say maybe that's where the bubble is in the market because fundamentals have zero impact on why people buy Oklo. They're just buying and knowing that power demand is just going to go through the roof and not just temporarily, permanently.
But
So
doesn't
I
that
think
make it a longer dated option on it though, right? The
exactly
fundamentals
that's what I'm
aren't there, right?
saying.
Yeah.
Because that isn't inevitable. Like we everyone, doesn't matter if you're a bear, AI bear, there's a power demand issue right now. It's going to happen in data centers. We're going to potentially build AI cities, too many of them. Doesn't matter if you agree with that or not, potentially. And that's going to hit the grid, hit the power demand. So Oklo is kind of that nuclear moonshot play that will get a lot of funding from the government. I think a lot of people in that space are underpricing the sovereignty angle on nuclear with the Oklos and SMRs. And I think that's why it's not a quarter to quarter story. It's like earnings for Oklo is meaningless. Like it's just empty. It's not going to matter at all.
Look, I agree, and you shouldn't get flack for that because I've invested a large part of my career in small and micro caps that were all pre-revenue story stocks that were building a future that could get there, biotech, med device, and then they deliver and it happens. So I think Oklo is set up like that. You talk about power, you brought it up, so let's pivot to that space, right? We've all three of us too, bullish on TeraWulf, IREN, Cypher mining. Which one do you like the best out of all of them? Because it's like having multiple kids. It's hard to pick which one's your favorite. You're not supposed to say that out loud, but I just did. Which one's your favorite power mining stock?
I mean, I think IREN has the best. At the end of the day, it all comes down to economics. And I think IREN has the best economics among the group. But I do believe that the first wave that we're seeing, we call this AI utility theme at Futurum. We call it like trying to tackle the GPU capacity issue and the data center capacity issue. We call it AI utility. So we talk IREN, Cypher, Wolf, even CoreWeave is among that group, Nebius as well. So I think IREN has the best economics. I think it was like 3.5 cents. They also have the vertical integration solution versus like the Cypher has a landlord angle onto it. But this whole bucket is going to do really well in the next 1 or 2 years minimum, in my opinion.
I think you absolutely have to be levered to there. I mean, Dan, I know you're in the space as well. And recently, I love TeraWulf because I interviewed those guys, the CEO, Patrick Fleury. They all come from the power industry. So they weren't Bitcoin bros that decided, hey, there's a big opportunity over here. They knew what was coming. But what's your take on that, on the whole space?
I went on CNBC with them. So I did it with the TeraWulf CEO together. Yeah, we were on together. I'm actually, we're going to round it out. I'm a Cypher. I actually think Cypher has the lowest energy cost. I think theirs is actually the lowest cost. I do agree with Shai's point about the vertical, but I actually think that is a blessing and a curse potentially. They work because IREN's basically trying to be CoreWeave and Cypher. And so there's a learning curve to that. And so the question is, do these hyperscalers need these power utility companies to do that part of the work? Is there an opportunity for new hyperscalers to rise and really take on the full infrastructure build out? Or is there more value in just building out the power and the shells and then just being landlord? And I kind of like that part because I know how many years and how many decades these cloud companies have spent, these hyperscalers have spent to become competent to stand this infrastructure up. And I know how hard it is to stand up an NVL 72 Blackwell system. So I'm not saying it won't work. I'm looking at the angle, guys. There's a lot of other ways to play the AI infrastructure. I like the power angle.
I think it's Mag 7, right? Like if you picked any of the Mag 7, you've done really well early on. This is still early days for the AI utilities, right? Yeah.
So I'm in 4 of them. I'm in Cypher, I'm in IREN, I'm in TeraWulf, and I'm in Bitfarm. Bitfarm's my most speculative.
I'm in CoreWeave. I'm in Core Scientific as well. That busted deal with CoreWeave. What did you guys ever look at Core Scientific? And then we got a question on Cypher from one of the viewers too to bring up. So what about Core Scientific? Any positions or no?
I stopped looking after I thought they're going to get acquired. I don't know if they're still going to. I actually don't know much about it now.
Yeah, the deal
fell apart. I have a friend that works there. He's very bullish. I don't have any MNPI. I'm just saying he's very bullish and excited. I looked at.
I had a good friend of mine was the former chief product officer at CoreWeave. They've had some change lately. I just always, speaking of the Burry comments today, like I always got a little nervous about their depreciation just because they are such a bare metal offering. They don't have the Nebius, but I think they're going to go that route. I think they're going to add more and more value added services on top of their infrastructure because they're going to have to. Otherwise, they're just going to be playing the race to zero margin game with the infrastructure itself. And I don't love that business model.
Yeah. All right. Let's pull up a comment here. I think it's from Chad Towers, who is a regular on the show. Happy birthday. All right, way to get that in there. Are these gentlemen pounding the table on CoreWeave, APLD, and I believe Dan has been strong on Qualcomm, Marvel, and Cypher in public appearances? Other names not in the news. What else do you guys like, essentially? I mean, you still bullish on all those names? And what I know, Shai, I think you made 2 recent new purchases. So the folks want, what have you done for me lately? What's your new stock pick?
I mean, I can go on, like, Nebius doesn't get talked about enough, in my opinion, for the cloud utility angle that they're trying to do for AI age. Like, going off of like what Daniel was referencing on Cypher, I mean, Cypher does have a higher floor than an Iron, for example, just because there is some risk on building into power and compute when Cypher, as of right now, I do think they're eventually going to go the Iron route as well, but they're renting out physical layer through long leases. I treat them more as a REIT that is a bit higher floor, just lower ceiling. But Nebius does have like that full ecosystem. They're building across the software developer layer. They were the first among this AI utility bucket to really land that hyperscaler deal with that $17 billion Microsoft deal.
Yeah.
Confirmed, like, I think for the whole space that the model does work, since those multi-year contracts does secure enough cash flow up front and reduces the financing risks until like the utilization is guaranteed down the line. And I do think that if you want to look under the hood, like the Nebius data centers are 20% more power efficient than the typical cloud sites. And that is the name of the game for these hyperscalers. They just want every GPU hour per hour they sell cost less than they produce. Like that is the economics of that whole space.
I think your
right.
DigitalOcean call was good too. Since some names that because I think they were asking about like what else you're trading. You made the call.
One thing before you give me other ones though, let me point out. I think you put your finger on the next big prediction. I think all these companies, these AI utility companies, are going to turn into REITs after they get to the point of like market maturity, which as shareholders, we're going to have tremendous capital appreciation, and then you're going to start spinning off dividends to us. I think it's going to be one of those plays we look like back on, the traditional data centers play. What?
Happy birthday, Lou. You can retire on that.
Yeah, no, seriously. I mean, I hope so.
You want some contrarian calls?
Give me a contrarian call besides Viking Therapeutics. I think that's a great one, but what else you got? Because I own that one as well.
I love I love Oscar on the dip today. Got crushed today on this BS ACA news, but that company has been talking for multiple quarters that it does not need the ACA to be successful. I think it dropped like 20% today.
It closed down 15%. OSCR for people listening. We got
bombed.
Thousands of viewers. What else? So Oscar Health is your top of your list?
I think that's a great one. Well, I just think based on the news today, and I'm going to stay. You've heard me talk about the analog of AI to human, innovation and human improvement and longevity is peptides. I think HIMSS is gotten absolutely battered. I love this company. I'm super long HIMSS. I'm going to stay super long HIMSS. I've been adding. And by the way, when these dips come like today on Oscar, I wrote a ton of options outside the money for like March 9-6 spreads, taking 40-cent premiums on a share. This is my trade. I'm not recommending anybody else. But every time Viking, for instance, would take that hard dip, it would get a big sell-off. I'd write more options. I'm doing 40-30 spreads, getting $6 a share. I mean, long-term, there's so many great plays. HIMSS right now, I'm writing put spreads in the mid-20s, Lou, in January, February next year, and collecting nice premiums. I'm not getting a ton longer on common. I'm pretty dense already in that particular area. But every time these big drops come, I collect premiums on options, especially knowing that momentum, it's still a bullish overall momentum. There's a lot of, I won't call it free money, but it's as close as you can get. No,
look, you're smart. It's savvy to be writing, against the volatility gives you great premiums. Shai, you mentioned another name. It just made me thinking Oscar and HIMSS make me think of Tempest AI. I mean, you still a fan of Tempest?
Oh, absolutely. I love Tempest. I think they're a big. If you want to play AI in healthcare, that is the route to go. The amount of data that they own is essentially the moat in healthcare AI. If you guys don't know that area, that is the moat, and they have the greatest. All they have to do is worry about the regulation. But I love the topic on contrarian plays. I'm big on FinTwit. typically people assume that I follow a lot of fintech plays because I'm big on there. That's not the case. One name that I've been quite bearish on for a while that is showing its colors a bit is Duolingo. I've ever since $400.
Love it.
I've never liked Duolingo. Again,
What's your core thesis not liking it? Just too much gamification and not actual results, like teaching people a language, or what was the core thesis to be bearish on it?
They monetize guilt over actual learning. I think a lot of people are going to realize in a couple years they aren't actually fluent in the language they're trying to learn, except they're just trying to make sure their streak stays alive. But for Duolingo, like even right now, like I'm realizing like a lot of the fintech gurus out there, how little they actually know about the enterprise SaaS space. Because they keep comparing Duolingo to Snowflake, ServiceNow, CrowdStrike. Yes, they're all SaaS, I guess, in a spectrum, but they are such different businesses and completely different realities. Like Duolingo, it sells a consumer learning app, and its entire growth engine depends on attention, motivation, and guilt, and discretionary spending. And that means the revenue can shift just like that. And I think the way their future is heading on a lot of the bigger players, they're going to have Duolingo-like products in their ecosystem for free. So if a new app becomes trendy, or household budgets might tighten up, or TikTok does something else that makes a new competing product, like the numbers are going to go down a lot quicker than people anticipate, where enterprise SaaS is the opposite. So I think a lot of people need to factor in how quick consumer behavior is fast and unpredictable, and Duolingo does fall in that lane way more than
I think
enterprise SaaS.
It's a great point, right? I grew up in an Italian Catholic guilt-ridden family, so that only worked for so long. And if people bail because of streaks, like you're seeing it in the user numbers, right? So I think you put your finger on it. And I love the fact, I think everyone mistakes the three of us as just like perma bulls on at least something at all times, but we can, to be actually bearish shows that we're looking at things objectively. So Dan, anything on the short side that you're looking at all, while I try and think of something on my side?
Yeah, I never short. My whole thing is I just stay away from things I don't like.
Same.
You know, and I think that about half of the SaaS industry is actually features that will land inside of an agentic platform. So like Monday today reported, they are screwed. That company is so screwed. It's a feature. And you know, like I said, it's not that I don't think there are great companies to short. I just think there's so many better, great companies to invest in. And I'm just the guy. I never show up at a craps table, Lou, and play the don't pass line. It's just not my style.
No, same. Look, it's unpatriotic to bet against stocks. I think
it's just like betting against American exceptionalism. I won't do it. I refuse. I will criticize quietly. But, you know, like as a whole, there is a whole space of companies right now that came out. They were vertical SaaS. They were industry specific SaaS. They were use case specific, persona based SaaS. They're all screwed. There's going to be like 5 to 7 of the big SaaS companies will gobble up everything that's valuable, and the rest in the next 3 or 4 years is going to disappear.
Yeah, so I'm going to throw one last bomb into the mix here because I have to be bearish on something. And like, I'm like you, I don't actually short stocks. I did short this one time via options, made a lot of money, said I'd never do it again, never bet against Elon. But my thing to be bearish on is Tesla. I love the pay package for him. Ooh. I just don't see them ever dominating the robotic space and humanoid robots. They're not dominating the EV space. He's a great carnival barker. I'm just like ginning it up here to see your guys' response here because I think you guys are lovers of it. But honestly, I have a hard time buying Tesla because the valuation is overstretched and he just never delivers on his timelines. He's a genius, nothing against him, but I don't think he's going to earn his $1 trillion pay package.
Yeah, I agree with you on that. I think if he does get to 8.5 trillion and becomes larger than Meta, Amazon, Tesla, and Google combined, then, you know, pay the man. I mean, that's my opinion, frankly, if he's capable of doing that. But I'm actually not, I do own a little bit of Tesla, bought it a long time ago, have not bought in a long, long time. I just think there's better plays for growth. I think this is, it's more like betting on crypto or MicroStrategy. It's just so parabolic. Its moves are not fundamentally are strapped to fundamentals most of the time. It's strapped to emotions. It's super heavily retail traded. A lot of weird short behavior and manipulation going on this one. There's no doubt it could run up. It's not where I put my money either.
What say you, Shai? Are you bullish on Tesla? Or you own it, or what's your view on humanoid robots?
I do own it. I haven't added it to that position in a while, but yeah, I mean, Tesla's a story stock right now, but I do want to call out that Elon hasn't missed ever. in his career. So
Well,
I think
he
that
hasn't missed what? Like a layup? Like he's missed every single timeline, dude.
no timeline, but he hasn't
Yes.
missed on the deliverable.
Yeah,
so
he
I think that,
eventually does it,
so
Fair.
that's why I think everyone agrees the next leg of the AI cycle is going to be physical AI, and Tesla is positioned to be the biggest beneficiary on that. So once that phase kicks in, like if Elon does actually deliver timeline, who knows? Maybe it's in 5-7 years. Eventually he will. I think it's going to be a perfect. They're going to be a clear category leader since Optimus, FSD, and their Tesla Energy, which is their second profit engine that's just humming, is going to be part of this like one unified narrative that's converting AI into emotion and productivity, and that's all physical.
Yeah,
physical
no, look,
AI
look, the potential's there. I think he's got to execute on it. To your point, I think also we had Chris Camillo before, who's deep in the robotics names. There's a lot of opportunities in humanoid robots that are still private, so I think we're
I
going
like
to get a lot of.
Qualcomm for this one.
You like Qualcomm?
This is where my contrarian bet is. They call them the dark horse. I mean, talk about low power SoCs. They understand, how to build chips for long lasting, efficient, low cost, and they can build scale like crazy. They've done it for cars. They've done it for autonomy. They're doing it for wearables. They're powering the Meta VR glasses. They're underappreciated and they trade it like 13, 14 times forward. So my whole thing is with them is like, you want to take a flyer on something that's as dependable as that business and 13, 14 times forward, or you want to buy something that's already trading 150 times forward. I think Tesla's amazing. It's an amazing company. It's just, it actually, unlike even a Palantir though, its fundamentals its growth doesn't even follow it. It is all story. Like Shai said, so if you buy the story, you buy the stock.
Well, no, you're buying the belief in Elon Musk to get it done. I think you're right.
I'm rooting for him. Like I want him to win. I like him. I
want to go to Mars when I'm 100 and live to 200.
I'll buy more SoFi, man. I'll buy more SoFi. Sorry.
Well, listen, dude, you guys have never disappointed, delivering every time. And we whipped around all the Mag 7 names for the most part, delivering, contrarian bets on Oscar and Tempest AI and a lot of names other people haven't heard of. Would love to join you on a show or, and return the favor one time and have you guys back. When we get a chance, maybe through the next earnings season, maybe we do another big tech celebration when we get on the other side for NVIDIA. Let me leave you with that. Quick, 10 seconds. What's NVIDIA do and how does the stock react next week after reports earnings?
Beat, beat, beat.
Beat, beat, beat. That's as quick as you can get.
It's going to be the catalyst for an end of year face melting rally in the market.
I love this. Happy birthday present comments.
$500 billion of visibility into orders between now and 26. Every breadcrumb from Coherent, from TSMC, from ARM, from every company that's reported, from all the hyperscalers, Lou. I mean, there's not a single clue at this point that indicates that it would be the biggest shock in a long time. And by the way, it would be a face melting sell-off. If they miss, they have to. All right,
so we got on one side a face melting rally or a face melting sell off if they miss. I don't think they miss. I think it's just going to be, is it good enough to keep ripping, roaring higher from here? But gentlemen, we could go on for hours. All right, Chad Towers got a question in. He's going to end it for you. Bought Qualcomm on your recommendation a month ago. Dan, thanks. Is the CEO all right in the leadership role? What do you think about management?
Oh, man. Well, first of all, don't ever take anything I say as investment advice. Just want to be very clear about that. I'm full of opinions, though. I know Cristiano Amon. I know Akash very well. Worked with them for a long time. We advise Qualcomm, so there's a relationship there. I've been working for them for a long time. Cristiano is an investor. He's shareholder focused. He's growth and innovation focused. He's truly is a technologist and an engineer, does understand the business, but deeply cares about delivering innovation to the market. And I think he's, kept his head down and worked hard while the company has been pretty consistently underappreciated. So I like it for its opportunities in data center, for what it's doing in automotive, for IoT, and for the opportunity in physical robotics. I think handset's fully evaluated. I don't think there's any upside there. I've said that to them. I say that to everybody out there. I think they'll do a good job running that business, but it's got a good leadership team. It's been pretty stable over the years. And I think there's a lot of upside with pretty limited downside.
Yeah. So buy Qualcomm from Lou Basenese, not from Dan. We won't say that. But
I did not advise. I do not advise.
Gentlemen, cheers to you on a special day for me for making it even more special. Really appreciate you guys being willing to share your insights and look forward to joining again soon.
Yeah. By the way, Dan and Shay, I still love that. It looks like you had the country band, Dan and Shay.
Hey, I'm not opposed to that. Maybe we got to do this live from
You
Nashville.
sing. Wait,
next
what are you
time.
drinking? Are you drinking tequila? When we drink tequila.
Yeah, no, it's an old fashioned because I'm so old. So I'm the old man of this group right here. So maybe we got to do live from Nashville next time, my friends. So, and everyone else, thank you for tuning in to get these insights. We're going to stick around for some more festivities here. I don't know what the rest of the crew here has planned, but it's something special for my birthday. So it could be good. It could be dangerous. But thank you guys for making it worthwhile no matter what. All right, Dan and Shai joined live, and now we're going to move on to, I don't know, this is the choose your own adventure that my partner in crime has chosen for me after this quick break.
Saying that the housing market is already in a recession, but he is still calling on the Federal Reserve Chair to lower those rates. Here he is with another push to do so.
If the Fed brings down mortgage rates, then they can end this housing recession. Low-end consumers who have gotten killed under President Biden, these high rates are hurting them because they have debt, not assets. So I think that there are sections of the economy that could go into recession.
Okay.
I think it's fashionable to blame Powell and high interest rates. The problem is the real estate market's a little bit more nuanced than that. And if you look at it, we've had a supply crunch for too long. It led to runaway prices. Bringing down interest rates 100 basis points, 200 basis points doesn't suddenly make up for that lack of supply. You're just going to reinvigorate the price increases. So you've seen in like 39 metropolitan areas, prices are coming down. This is a market trying to restore equilibrium. Giving people cheaper money to go chase prices again is just going to make it more unaffordable. So all right, welcome back to the Big Skinny. Man, I could talk to those guys for hours. I really want to drive home the fact they have unique insights because, as Dan mentioned with Qualcomm, he's known the leaders, the management. They've acted as advisors for many of the major big tech companies. So chock full of insights. I know we had a comment here. Do those guys, yeah, that's Qualcomm. Chad, you bought it. It sounds like I got to buy some tomorrow when the market opens. Do they have a YouTube or just Twitter? They're on Twitter, and then I know their podcast that they do together, Futurum Equities, also has a YouTube channel. So check that out. We'll bring it up on the next show. Put it in one of the comments. Chad, again, much appreciated. His ability to convey this publicly has been difficult, in my opinion. You need to be a spokesman. Yep, he can be a great spokesman. So appreciate you joining. Now, I got to bring someone else in that joins us every week to tell me what the heck we got going on next besides headlines and head scratchers.
Well, welcome back. Happy birthday again there,
Happy birthday.
sir.
I got to get in my official garb now, huh?
Hey, I got to tell you something. Sitting here for that whole interview with this paper hat on, not the best choice, man. This thing is terror on a chin.
Yeah. Well,
but
here we go.
you know, Dan and Shay, a lot of great names. I mean, I thought a couple weeks ago with biotech with Jonathan, there was a lot of names shared, but you know that was amazing. Great stuff.
No, they're always value add, so I love that. So what are we doing now? We got headlines and head scratchers, which is the time of the show where we share updates, things that make us go, huh, and additional insights. Maybe some stock recs, right?
Absolutely. Let's do that first. And then we got a little something special.
All right, let's get to it. Let's rip through the things that are important and then get to the fun. What's first on deck here?
All right.
Do we remember? It's meta mistakes.
Meta mistake.
Yeah, many mistakes for Meta. I don't know if you've been paying attention, but they still have like the biggest envy of being a hardware company like Apple. Mark Zuckerberg has a crush on Steve Jobs and Tim Cook. He really wants to get into hardware, and he's blown, by this latest count here, if you tally this all up, $73 billion exploring the metaverse for nothing, for next to no revenues, and virtual reality glasses and augmented reality glasses. Folks, if there wasn't a litany of reasons for me to stay away from Meta just because of their privacy violations, the fact that they were well aware that social media has terrible effects on preteen girls, this is another major reason that's fundamental based, not principle based. They're never going to be a hardware company.
So you're saying these AI smart glasses aren't going to do any better than the Quest 3D virtual reality headsets?
Incremental at best. Meta, you own Meta because when it gets cheap, because it's nothing more than an advertising company, and a phenomenal one at that. No disrespect, that business prints money. 98.2 some odd percent of revenue comes from advertising. Next to nothing.
It's not hardware.
No, it's just not hardware. It's not going to be. But I guess when you're Mark Zuckerberg and you've got more billions than you know what to do with, you can chase after lost causes.
Yeah. So what, he lost a couple $100 billion, whatever.
Yeah, no big deal, man.
Yeah.
One day we'll say that.
Yeah. Tesla trillion.
Yeah, I don't want to spoil it here. We brought it up with Dan and Shai. Yeah, I just think absolutely give Elon Musk the incentives, $1 trillion pay package that's based on performance. You get the company to $8.5 trillion and some ungodly sum of hundreds of millions of dollars in earnings, you absolutely deserve that kind of pay package. So good on you, my friend. I'm just not going to be sitting around betting on that. I think, as Dan said, I'm not going to short things, but I'm going to invest in other opportunities that I think have more upside.
Now, I know, the theory is that the board wanted to pay him because they were afraid he might leave if they didn't pay him. Do you think for any reason he was going to leave?
Of course. Why wouldn't he, right? I mean, he's built the company, he owns enough, move on and start his own AI company. I mean, he's got all the optionality in the world as the world's richest man. What does he care, right? Like, take your ball, go home and start another league on your own.
Do you think he would leave, actually, with the ego and with all that he does in those? You just start again, pick something new?
I don't think he would, but he had all the leverage in the world and he played it masterfully.
All right. Well, I guess we'll never find out. Doesn't matter.
Yeah.
All right. Rotten apple.
Thankfully. Yeah. Rotten apple. Look, everyone likes the dog apple. I even started to because they weren't really making big moves in AI. But then this is what always just anchors me to never give up the shares that I own since 2014 is the fact that their divisions of their business, segments of their business are bigger than many entire businesses. I mean, if you look at it here, you look at the iPhone is bigger than Meta and Bank of America. Services is bigger than Target. Wearables is bigger than Starbucks. I mean, you go on and on. The iPad is bigger than AMD, a huge chip maker in terms of revenue. So this is a juggernaut. It could prove to be one of the best businesses ever created in terms of value creation and return to shareholders. So it's not a rotten apple.
Still a fanboy, because you've been saying lately, a little bit, they're not innovating as much, and you've been a little bit,
They just got to iterate. Look, it's like genetically modified apples right now, right? They'll never go rotten given the business model they got. That's my take.
All right. Trump trouble.
Yeah, this is fear-mongering in the headlines, right? Like, my biggest takeaway from this whole episode is there's plenty to be bullish about. And there's one thing that you should absolutely ignore is headlines like this that are predicting a 1929 crash. Look, I appreciate the comparisons to the dot-com bubble versus the current AI potential bubble or eventual bubble. But sitting here predicting that we're going to have another just disaster of a collapse that leads to a Great Depression just reminds me of the guys that are like broken clocks, they're right twice every once in a while, that have just been warning of economic collapse their entire careers for 30 to 40 years. This is coming from this op-ed was penned by a regulator who just thinks that we're just not regulating enough. Free markets aren't based on overregulation, and it's not going to be, we're not going to collapse because there hasn't been enough regulation.
Well, good news for Trump is if it all crashes and, all goes to hell. I saw him on Fox Sunday Night Football last night in the broadcast booth. So maybe he's going to have a second career there.
Yeah, look, I'd argue, not a popular take, he's a better commentator than Tom Brady. No one's better than the Manning brothers, but I think President Trump can
stepping on the GOAT like that.
I'm a Giants fan. The GOAT ain't that GOAT-ish if he can't beat the Giants repeatedly. So.
Tom Brady is great at everything, no matter what, period.
He is not great at everything.
All right. Well,
don't believe his own press clippings. That's what he does. That's as my dad said. Don't believe your own press clippings. Tom Brady certainly does. Unpopular takes.
All right. Correlation caution.
Yeah, look, again, we're super bullish this episode. Now I want to just be, cautionary that there's going to be a lot of things as this rally continues that people try and point to random indicators and says, if this happens, this has happened, right? Look, sales of vinyl albums correlate with Apple stock prices. So correlation does not equal causation, folks. There was another one. This is a great website. The number of people that publicly drown is correlated to number of films that Nicolas Cage appears in each year. Have nothing to do with each other, right? So I think you're going to see this pop up. Or do they? Yeah, as Taylor suggests, maybe they do. I don't know. As this bull market continues, you're going to see a lot of financial journalists struggling to make a name for themselves by predicting the top and pointing to random correlations that don't have any implication. And I can't think of any other shun words to point that point out, but that's it. Just ignore it.
Bro, you've a few weeks ago you got into a little bit of your due diligence and how you kind of analyze and where you do your research. Where in the hell did you find that chart? Like, where did that come from? What gem or what rock did you turn over to find that?
Never kiss and tell, never share your secrets, right? I'm an Italian. You
Sales
know
of LP vinyl
how to
albums,
keep secret.
Yeah. Stuff.
Actually, you see on the bottom here, there's the website. It's Tyler Vegan. VIGEN. Go there. There's the most ridiculous correlation. Right. I think he's got like 4,000 of them. They're called spurious correlations. It's a reminder that correlation does not equal causation.
That's like the app that you bet on the weather and bet on what next pitch is going to be, or just whatever stupid.
No,
things
that's
are
just
out there.
degenerate gambling. That's a degenerate economy. This is just actually trying to inform people. I don't either.
So don't judge. All right. Well, I think it's probably time for our little birthday celebration. So, we've had this little virtual birthday. Obviously, I wasn't able to be there, today, unfortunately, and we wanted to throw you a little virtual party. We have some drinks in the studio, some hats, some fun, some noisemakers. Well, and I know how much you love my Is It Crypto or Crap game. So, I really thought about bringing that back for you, a special edition just for your birthday. But then I decided against that.
You've learned. You're growing wiser in your years.
Yeah, maybe a little wiser, but, someday. But anyway, I invited some guests to come to the studio today, and, some were able to make it. Not everybody was, but, we figured I'd, play a little game to see if you could guess who I invited.
Oh my goodness.
So we have a little game called Party Crashers, a birthday party guess who, to see if Lou can guess who Dodd invited to the party.
I'm so nervous right now, but I'll respect our friendship. And
we're talking about AI a lot too, so this will come into play. So the first guess that I guess, see if you can guess who I invited.
I don't know. Who is that? That's an AI version of who? I don't know.
Come on, really? That's you, brother.
Dude, you got to understand, I was just at a conference last week and they made me into a woman with AI. And so that is the AI image stuck in my mind. I had very nice lipstick color that I tried to find.
I thought for sure you were going to get that one, but okay, maybe not. So we invited somebody else to the party. Who could
That's
that
you,
be?
my friend. That is 100% you. The blue eyes.
All right, good job.
All
You
right.
got the second one. Good job.
I've never seen you in
your party,
bro. I've never seen you in a tie, by the way. For the record,
you probably never will. So let's hope that doesn't happen.
At my funeral, maybe, but let's hope that's 100 years from now.
Let's hope that doesn't happen. Yeah. All right, so we also invited another friend to the party. Who
kiss me? I'm Italian. I don't know who that is. You invited. Kenny
Pocari,
no way.
On.
What are you using for AI? AOL.com's version? What are you doing? That's so bad.
You can't even tell your good friend Kenny Pocari there. Come on.
Listen to me. Okay. Kenny is indistinguishable without gray hair. You have to have a baby with gray hair. There's no giveaway there.
What, you just want everything given to you? Come on. This is just because it's your birthday, you want me to give it all away? Come on. Maybe the next few will get a little easier for you.
Charles Payne?
All right. Is that it is Charles Payne. Unfortunately, Charles couldn't make it, but we did invite Charles to your party. But he does send his best happy birthdays and best wishes.
I'm sure he does. I would really appreciate it.
And who else did we invite to your party?
Eric Jackson?
Yes. See, you're getting better. Ding, ding, ding.
See, look, the clues are easier now.
So you need clues? Lose clues?
Lose clues isn't here this week, so I need clues.
All right. And who else came to your party?
That's got to be Dan Newman. That is 100% Dan Newman.
Dan Newman did come to your party. He didn't wear a hat. He wasn't.
Dude, I think he's more jacked than that. If you've seen his latest posts, that guy is not. That baby's not jacked enough.
Well, Dan did come to your party, and who else?
Jesus did not come to my birthday party.
You always have to leave room for Jesus. Of course, Jesus is always invited to your birthday.
Amen to that, my friend. What and who is the Callahan? Tommy Boy,
Tommy Boy was invited, but he's at your party in spirit, as we know. He wasn't actually at your party.
That is your spirit actor right there, if there was one.
If he was alive, he would have been there.
Oh my God. All right, now we're just getting cheesy. Now we can guess all these. You need to get better AI.
So you're unhappy. That's it. You got to get better AI. That's all I get. That's your summation of my great game for you.
It was a great game. Listen, I got sentimental early, man. I appreciate you. You're like a brother from another mother. So I do appreciate the fact that you celebrating me so meaningfully on my birthday. I appreciate everyone joining the show. Look, this was an experiment 30 episodes ago that we continue to do, and I think we're adding value. Gain Therapeutics, a company we featured in one of the early shows, is up 28% today alone. Our top 10 AI stocks not named NVIDIA are up an average of 50%. So we're doing something right. So I thank everyone for being a part of this small journey, as I see something else going on in the studio here too. So I think
another cocktail might be coming your way, sir.
Another cocktail. I think a candle was being lit, or maybe the dynamite to blow this place up. Oh, look at this. Chocolate cake, my fave. Candle and all. Thank you.
We know how much you love birthday celebrations.
I do, my friend. I'm making my wish, my friend.
Happy birthday, brother.
Hey,
wish I could be there.
Thank you, my buddy. We'll celebrate together soon. Appreciate it. You nailed it on all the levels. Old fashioned, lots of chocolate here. And thank you all for tuning in. Once again, episode 30 is in the books. Next week, we're back here. Same bat channel, same bat time in Brooklyn. The Big Skinny with Lou Basenese and lots of friends. Thank you. Woo.